anytime there was a shortfall in funding, it was an item that was quickly removed. And sometimes too, the delay in the release of funds impacted on the welfare of people. We are talking about real people now, whose livelihood depended so much on the monthly earnings that they were paid. In any case, those funds were not even adequate. It was something that was very small, but they were also not getting it on time. So the overarching objective of the Pension Reform Act was to ensure that people who have worked in either private sector or the public sector have access to their retirement benefits as at when due. That's every other thing is complementary to that objective. So that was enacted in 2004, and 22 years after, we can look back and say that we've made some progress. There are some gains, there are some challenges, and there are some lessons. If you look at the assets under management, as we speak, we are about 28 trillion, which is significant. If you look at the domestic investment environment, it's very significant. In terms of contributors too, we have over 11 million contributors. Yes, are we where we want to be? No, we are not where we want to be. But we know that we've made tremendous progress from where we used to be. I mean, my dad retired as a permanent secretary in a ministry in Oyo State. And while we were growing up, it wasn't so easy as a retiree for him. You know, for somebody to have gotten to the peak of his career, and when it was time for him to get his monthly pensions, he had to wait. Sometimes there would be arrears. We would be very excited when they paid accumulated liabilities. It was such a terrible situation. And we thank God. You know, while I was coming here today, one of the things that came to my mind is that that's one of the legacies of the President Olusegun Obasanjo's administration, a very credible legacy. And to be fair to the other successors, I mean, they have managed to keep it. There have been variations in terms of the implementation, but almost every successive administration has seen a reason to ensure that pension assets continue to grow in that way.
But are you speaking specific to civil service or people in that sort of area? Does this apply to the private sector as well?
Yes, it applies to the private sector. It is
because the private sector has it been bedeviled with those kind of issues as well.
So in some cases, for the private sector, in the past, some of them did not have. Some of them that had pensions, those pensions were also unfunded. So it wasn't just a case of you not having a plan for your workers, but people will say, okay, we have pensions, but other things took priority in the course of the year. So setting aside those funds for retirement payments for people in some cases may not be a front burner issue. Imagine if you're having problems paying salaries. Pensions can definitely not be a priority, but those people that are earning current salary will one day be retired, and if you do not make provision for their payment, they will definitely be retired.
So how does the PRA capture that?
So the PRA, it's a law that applies to both private and the public sector.
Yes.
And as a matter of fact, the industry is driving, one of the initiatives of the industry right now is pension compliance. The industry is going to everybody, to all state governments. All state governments are also required to participate. It's a law. So some of them are at different stages of implementation, but everybody is supposed to implement PRA in a certain way. There are arrangements where they allow some state governments to implement it in a certain way. But if you look at it from the perspective of the coverage, every single organization that has 2 or more employees must be part of the pension scheme. So it's a law.
Okay, 28 trillion in 22 years. That's a huge progress, you know. But again, I think it would be important for us to also understand how we can access this money, right? At what age? Is there a short-term provision as well? It would be nice to have those information because not everybody's patient with long-term. A long-term saving
is going to be 60.
Yeah.
Chico, by the way, you don't look 60. You don't look 60. I mean, you still look like a very young guy, like someone in his maybe mid-40s.
Wow.
I mean, that means you probably don't need your pensions now. You're already well taken care of. But I think that I had mentioned the other time that I think it was a very good reform that came in place, and because a lot of people, imagine 11 million contributors that have been captured in that safety net. So there are ways in which people can benefit from the scheme. And before I go into how you can access those benefits, especially for people like Chigo, like you said, it's also important to say that even before you retire, there are some benefits that are being baked into the arrangement. One of the major reasons why PRA 2004 was amended in 2014 was to accommodate certain innovation and changes. One of the major ones is the RSA mortgage, which allows you to use a part of your contribution to buy a house.
Okay.
Chigo, don't look at me. You're no longer eligible for that. but for people that have, for people that say have some time at work, you understand, they can access it. Except you want to prove to us, but age is not on your side. But so you can get a quarter of your pensions or the RSA balance as contribution for equity contribution, as contribution for home ownership.
Yes.
So
that's the part that is
captured by MRIF.
Yes,
that we spoke about the other day.
Captured.
Yes, that's the part.
Yes.
So what age is this?
So even before MRIF came on board, and MRIF is not a compulsory bundle. So you might decide not to go with MRIF. You might decide MRIF is just something that is also complementary. So the idea is, if you have a few years left to retirement, you are not allowed to do it.
So
because how will you pay?
Maybe you and I don't even qualify.
No, I still qualify. I'm still a young man. So,
okay. MRIF,
Yes.
I think, is 65.
So that's
It was 60. I seem to recall it's at 65. So at 60, if I can just pay the balance of the 5 years.
So the idea is, if you are no longer in employment, you have to be able to demonstrate. I mean, some banks might be able to give you loans. Do you understand that if they are sure of other revenue streams? But if you are using the RSA contribution, and even for MRIF, they want to ensure that you still have longer period of time to be able to pay. It's just
to pay the mortgage.
Yes, to pay the monthly with the interest, not necessarily because you have a lot of
25% is yours.
it's your money.
It's the mortgage.
So that's the idea. And then, so I think that that has also been a very impactful initiative, because a lot of people have been able to purchase their homes because of that particular platform. So beyond waiting for retirement, you can access that for home ownership. That is one part of it. Another part is for people who lose their jobs for whatever reasons, or for people who get tired of working. Before it was if you lost your job, but later on it was also accommodated that if you resign your job after 4 months, you're eligible to access a quarter of your RSA balance. But that is if you have not found another job. So you can't say that
in 4 months.
In 4 months, yes.
So that's in addition to the 25%.
No, that's just the 25% you can get. So if you've gotten that one, are you talking about the home ownership?
For the home ownership. That's in addition to that.
Yes, it is in addition to that. You can get it, but it's not as if you must get home ownership. So there are some people that may never collect that.
I get that. I'm just saying,
also
if you've taken that,
yes, you can still collect
take the 25% lump sum.
Because of course we want the industry wants contributors to be able to enjoy some flexibility, while we don't want the contributors to die before they are maybe 50 before retirement. Do you understand? Somebody knows his job.
Let's remember the average age mortality rate for men in Nigeria is actually 54. So I beat it already.
So you're saying an exception.
Exactly. It is. Google it. Now, let's go through that process. So you've got to reach a certain age. I think it's what is that age?
You have to have more than 3 years before retirement. Yes.
You have to have more than 3 years. So someone who was 50, for instance,
so 50 you are already you are supposed to be retired.
50.
In the
Yes,
books,
in the books, in the
of
books,
PRA,
in the books.
What's the retirement? Is that it?
So
What's the
from
age?
50 you can access
Okay.
your benefits. From 50 you can.
But that's not
access
the
your
retirement
benefits. But
age.
that's not. So if you are 50 you can access it. But if you are still working like you are still working. So you are eligible to continue to make contributions until you say that. But tomorrow, if you say I don't want to work in a structured environment anymore, you can access your benefit. Technically, you can start accessing your benefit today. But please don't resign. It's better for you to continue to grow your retirement.
So that you can continue to do
Yes, so I can continue to do.
Perhaps it's the secret.
Yes, it's part of it.
Okay, so Raphael asked what the process actually was. So for those who they're there now.
For the home ownership, right? Are you talking about your
No,
home? Okay.
I think we're done with home. Do you have any
No,
more
we're done-
questions?
we're
about-
done with home.
Yeah, we're done with home. We're speaking pensions generally
Okay.
now, right? And it's a great initiative that some of these additional things have been added into it and stuff, because there's a lot of people who will be of retirement age who don't own their homes and want to use this avenue, and who are not 60 like me. So, but what would be the process then? Let's say someone wants to stop working, they're 50 plus, they've worked for the previous
30?
30,
30 years,
35 years or whatever it is. You know, they've got a tidy sum. You know, what do they, what's the process?
So the person will approach it's PFA. You can do it digitally these days. A lot of PFAs you can access. You don't necessarily have to go to their branches to be able to do some of the submissions. There are forms that you have to. Pension fund administrators. Okay, so maybe I should also say that in the pension industry, so that it can also help our listeners, we have, I always like to say we have three major stakeholders. The pension fund administrator,
Yes.
and which we call PFA, and then we also have the pension fund custodians, and then we have the PENCOM, which is our regulator. The industry is a well-regulated industry, and each of those players, each of those stakeholders have their role cut out for them. The pension fund administrators are in charge of managing pension assets, while the pension fund custodians are in charge of keeping custody of those assets. And I think, if you ask me, is one of the major innovations that has ensured that the pension industry continues to grow in leaps and bounds, because there are clear delineation of duties. Even though if I'm a PFA, I cannot access those funds that I'm managing. I just have to give an instruction to another person. The custodian executes most of those instructions in terms of transferring funds to investment houses under strict conditions. So even as a PFA, and that's one of the benefits of the entire pension industry, even as a PFA, you cannot give an instruction that is that is not compliant with the rules, because the custodian will flag it and will say, I'm going to tell PENCOM about this. This is not consistent with what you have in the rules.
So that's the way to put a check on.
Yes,
on the different
it's a
parties.
solid check and balance for the pension industry. And I think very few, yes, I know that asset managers generally they have it, but you need to meet PENCOM. We have a very solid regulator.
So, okay, you want Chico?
Yeah. I like these things broken down, but let's for people who don't immediately connect with long-term wealth creation, how has this now panned out? You know, what is citizens' reaction to this? What feedback do you get, for instance? Are people happy?
Okay, so I would say that because the industry as a whole is trying to ensure that some of those benefits are tangible, like the home ownership I mentioned to you, a lot of people are beginning to see reasons why they should take their pensions very seriously. And you know, we'll talk about personal pension plan later. I call myself a self-appointed personal pension plan ambassador, and I will explain why. You know, one of the I tell people that one of the major goals you should have in life is financial independence, and that's why I like what you are doing with this program. We are educating people on how to create wealth, because the truth of the matter is, if individuals don't create wealth, even nations will not. I mean, if we want Nigeria to grow significantly, there has to be capital formation. The 28 trillion naira that we are talking about, those funds are part of the funds that have been used in road construction. They are part of the roads that have been used to construct hospitals in a way and all of that. And so for us to be able to continue to make giant strides as an economy, we need to teach financial literacy. We need to let people know that no matter how small your savings, no matter how small your income is, you still have to imbibe the culture of saving.
Absolutely.
And I like the way Akkad put it in the classic, The Richest Man in Babylon, by George Clason. He said that a part of what you earn is yours to keep. And he said the minimum, he recommended the minimum. He said the minimum is 10%. And I'm a great advocate of our industry, and one of the reasons why I really love the pension industry as a whole is that I believe that what the pension industry has done for more than 11 people now, and for more people to come, is that they have democratized access to wealth creation, and they have also ensured that a lot of people who would have been excluded from financial security have some sort of financial net at retirement. Like I said, the fact that it's also compulsory and PENCOM is not taking it lightly. One of the regulations that we have in place now is that you should not deal with vendors, especially operators. Don't deal with any vendor that is not pension compliant. And you can imagine what the multiplier effect of that is on the economy, because the idea behind it is that you cannot be benefiting, you cannot be making money off our industry if you are not paying pensions to your staff, and that is helping compliance. Is not so, we cannot say that it is going very fast, but gradually people are beginning to see the reason why you should do it. So over time, people are learning the importance of it, and as an industry, we continue to educate people about the benefits of saving. During the recently concluded International Women's Day, recently, the industry as a whole targeted a lot of market women, a lot of women in places where they could gather them together. And what they did was to teach them financial literacy, tell them the reason why they should embrace it. So I think one of the imperatives that will help us make significant progress is for us to continue to teach financial literacy, which I've come to do today.
Speaking of the informal sector, I know there was a time that the industry was sort of introduced to that sector. How has the progress been?
Well, the progress is currently we have just about 2 billion.
It's a tough
yes,
one.
It's a tough terrain.
Yeah.
Just about 2 billion in assets. 2 billion in assets. We have
Of the 28
yes,
trillion.
just 2 billion, about 2 billion, and then we have less than 300,000 contributors. But I can tell you for free that will change significantly this year and by next year. And it's because of a couple of initiatives that have been put in place by the regulator, one of which is the licensing of the accredited pension agents. Accredited pension agents are, I'm not going to mention any brand because I don't want Chico to charge me for what I'm not making money from. So there are institutions that have been licensed to go to the interland, to go to everywhere. They believe that they have a lot of widespread, and they can help teach financial literacy, tell people what it's about, and they can also help to onboard people on that scheme. Another major thing that I believe would also drive this is that pensions is now for everyone. There is nobody, and before I leave here, I'm probably going to get Chigo's commitment to do voluntary contribution, which is now under personal pension plan, to continue to increase his savings ahead of his retirement. Because right now, the personal pension plan has democratized, I like the word, has given access to everybody. It's now a pension for everyone. There is nobody that can say that is not eligible. Ask me why. Because even for children, you can do for your children. And I'm going to set it up for my children too very soon. Yes, you can do for children.
Before they've started
Before they are 18 years, you can set it up. And we've seen it in this country.
Who's that account? Who's that
So
account?
the account is for the child, but it will be operated by the
parent.
Yeah, by the parent. By the
There's
guardian.
something they do like that in the UK. It's called an ISA or something like that. And I did that for my kids. They started something like that very early. And then when you get older,
You transfer.
it can then be merged.
Yes, they
into
can
as
access
one.
it.
Yes.
They can access
At
it
18,
at
right?
18. They can
Transfer
make
it.
decisions about it when they are 18
It
years.
now becomes it sort of becomes your pension,
Yes, it
your actual
is a
pension
pension.
account, and you just continue from there.
That's
So it's giving you a head start
Yes,
already.
Do you understand? So it really makes a lot of sense. And just to buttress your point, it's just one pin for life. So that child will not need to open another RSA in the future.
Yeah.
And imagine your son becoming 18 and he probably already has more than maybe 20 million in his retirement account. And I love the way Albert Einstein puts it. He says that compound interest is the greatest invention. Do you understand? The fact that you can continue to earn interest on funds, on interest makes a lot of
takes
sense.
you to your destination faster.
But there is a downside that
Okay.
I want to mention here, and perhaps you speak on it. So there's no doubt that if you had 20 million naira 5 years ago, right, and you have 20 million naira today, the value of that money is not the same. What that money can buy you is not the same. This is an area I think that I might focus on a bit, and let's have a look and see.
In terms of investment exposure.
Yes, in terms of investment exposure
exposure.
and what can perhaps mitigate the value of that money. Yeah.
So in terms of asset exposure.
Yes, I mean, I understand you perfectly. I had mentioned when I started that, of course, we have cherry news and we have not so cherry news. In terms of what we're talking about is real returns versus nominal returns.
Yeah.
In naira terms, yes, assets have been growing over time, but in real terms, we agree that it's been a bit challenge. Do you understand? And it is not, the way I would put it is that it is not peculiar to the pension industry. And but what I can tell you is that as an industry, it's an industry that is proactive, and some of, like I told you, especially with the advent of this new DG, we've been seeing a lot of innovation, we've been seeing a lot of circulars that are geared towards addressing some of the gaps that you have mentioned. One of such innovations or one of such initiatives is the foreign currency fund, which for people who are concerned about devaluation issues, addresses part of those issues. Because right now, in the pension industry, there's a fund that is dedicated to people who earn dollars. And it means you can save dollars if you earn dollars. So if you are afraid of devaluation, part of it can address some of those challenges. Yes, we know that over time, because of inflation, those are the conversations we are having. Inflation and devaluation, you probably have exposure abroad and you are saving in naira. What will happen to your naira when you want to convert to dollars? We all know that, and thankfully the industry as a whole too is doing a lot in that space. And if you look at the rate of return versus the other investments that have similar asset class, you will see that we are not doing badly. Having said that, the industry is also looking for some of the things we are trying to do, which Pencom also did recently, was to release a circular that allowed us to increase our exposure to certain asset classes, to equities, for instance, because at some point people felt that we could do more in terms of equities, especially for people who are not so risk averse and people who have a longer time. Do you understand? So we now have more increased allocation to equities, and we believe that some of those, and also what we are doing in the alternative asset space, Pencom has allowed us to invest in the alternative asset space, private equity funds. Some of those funds of those funds over time will deliver above industry returns, which we believe that would also help to mitigate the impact of, or maybe not of devaluation, but of at least of inflation.
So the foreign currency fund, I have to take that decision, or you have to take that decision?
So it is not for everyone. It is for people who earn dollars. For now, it is for people who earn dollars and for people
or pounds.
Yes, or pounds. Yes, you can do. If you have another currency, but you have to also tell us that we can convert to dollars. But the fund will be managing dollars.
Defend our pounds.
No, it's fine. And I think the idea behind it, without speaking for the regulator, is that we don't want a situation whereby people will be converting their naira to dollars again. You now give us another problem as a nation. Do you understand? But if you already earn dollars, you can put it in a fund that is also invested in dollars.
Any positives around tax?
Yes, a lot of. I won't say too much, so that the tax officers will not come after. But it makes a lot of sense. You know that pension contributions are tax deductible. So what it means is that. Okay.
You see all these.
No, I'll break it down.
Please.
Okay, so what it means is that, let's say, Chico, I know that you're a big man. So let's say your income is 5 million. Let's say your income is 5 million.
Right.
And before taxes, your contributions, so you now make, I'm afraid to, I don't want to put actual figures. So whatever contribution you make to your pension account will be deducted from that 5 million before taxes. Yes, before taxes will be applied.
Okay, now let me ask a different question. So Chico's not working anymore. He's retired. It's been 4 months. Guys, I need 25%. So my money. This 25% I get paid. Am I paying tax?
No, you're not paying taxes on it. It's tax free.
25%
It's tax free. No, it's not.
Because the tax has been paid already back in the day.
Yes.
Right?
Yes. Okay. Another question you did not ask that I will answer is the fact that pension assets are tax exempt, which is also a unique selling point. So apart from
pension assets.
Yes, pension assets.
So like if I were to buy a house, for instance.
No, not house.
Okay, explain.
Except is the fund that is buying a house. Do you understand? Pension assets in the sense that all the 28 trillion that I'm talking about, the income we make on federal government instrument, the income we make on if we sell equities and all of that, all those ones will not be taxed. Yes.
I see.
So eventually what that means is that if you compare a fund that is similar in asset allocation to pension assets has a potential of delivering a higher return than that fund because of the tax savings.
Yes. Fantastic. I honestly didn't think it was going to be interesting. I was like, pension, it always comes across a little bit mundane, but it's an interesting thing to discuss.
Yeah, and quite a number of tips as well.
Yes. Yeah. I will go out on a limb and say it would be nice to have a part 2 of this. There were a number of different questions that we had lined up we would have wanted to ask, but unfortunately we ran out of time.
Wow.
So things like understanding the progress made with the informal sector coverage, how does regulation act or promote transparency and accountability of fund management, for instance, how contributors monitor or optimize their pension accounts, and whether technology or AI is playing any role. Everybody's saying AI. Would have been nice to hear about those sorts of things. Tax advantages, pension as a legacy. You did speak about real estate support. So, and then the different types of PFA. You mentioned 2 today. I don't know whether that. So, can you promise to come back again?
I mean, I'm happy to be here. You know, I've told you I'm a self-appointed personal pension ambassador. Yes, everybody must know about pension. Everybody must embrace it. It's a scheme that you cannot afford not to be part of. And even for the informal sector, whether you're a business owner, it should be one of your income streams. I know a lot of business people, they say, what return are you going to give me? But it should be one of your income streams that will ensure that you achieve financial independence. Thank you.
All right, thanks a lot, Ireti. Thanks for coming around. Like Chico mentioned, we'll try and bring you back. We have to bring you back so we can complete all of those questions. Lagos, Nigeria, we'll see you again next week on Wealth Management and You.
I always thought Ireti was a girl's name. What do I know? I'm just a guy on the radio. All right, that's Wealth Management and You. Comes your way at 5:30 every Monday on Classic FM 97.3. So please do join us next Monday for another edition of the show. We'll take a break now and come back. TDS rolls on.